Washington and Beijing are now locked in an economic death spiral, a brutal trade war that neither side seems willing to back down from. The US government, driven by the stubborn policies of the White House, has once again chosen economic self-destruction as its strategy. Slapping tariffs on key imports without fully understanding the consequences, China, in response, has unleashed a counteroffensive so calculated and ruthless that even the most seasoned political analysts are left speechless. What was once a predictable tit-for-tat in trade disputes has morphed into an all-out war, one that threatens to collapse industries, wipe billions from the stock market, and leave ordinary citizens paying the ultimate price. The arrogance of Washington policymakers is matched only by the sheer cold-blooded efficiency of Beijing's retaliation. The US seems to believe that it can strong-arm a global superpower into submission, forgetting that China is no longer the manufacturing slave it once was. On the contrary, it now controls critical supply chains, dominates rare earth production, and holds enough US debt to send Wall Street into cardiac arrest at a moment's notice. But China is not without fault either. Its government, driven by nationalistic pride and a thirst for global supremacy, has chosen economic warfare over diplomacy, punishing not just the US but its own industries and consumers in the process. In this reckless game of economic brinkmanship, neither side is acting in the interests of their people. As markets tumble, corporations panic, and global supply chains fall apart, the biggest losers are not the politicians making these decisions but the ordinary workers who will soon find their jobs on the chopping block. While Washington and Beijing play their high-stakes chess game, small businesses, farmers, and middle-class consumers are being left to suffer in silence. Prices are set to skyrocket. American and Chinese companies are bracing for collapse, and the global economy is being pulled toward an abyss created by the unchecked egos of world leaders who refuse to acknowledge their own incompetence. It is a war of stubbornness, fueled by propaganda on both sides, where facts are discarded in favor of political theater and economic devastation is accepted as collateral damage. How did we get here? And more importantly, how does this end? Is there a point where one side blinks, or is this the beginning of a prolonged, irreversible economic war that reshapes the world order? The stakes couldn't be higher, and the fallout will be felt far beyond Washington and Beijing. The next moves will determine the fate of industries, global alliances, and the financial future of millions. Stay with us till the end. Hello and welcome back to Innovative Check YouTube channel, where we delve into the innovative and transformative projects changing our world. If you're new to the channel and enjoy learning about innovation stories around the world, you've come to the right place. Please subscribe, like, and comment to help boost our videos on YouTube. The air in Washington, D.C. was thick with tension as the latest round of economic measures sent shockwaves through financial markets. Traders watched in disbelief as the Dow Jones Industrial Average tumbled, the Nasdaq Composite followed suit, and the S&P 500 struggled to find footing. Analysts, economists, and investors alike were all trying to decipher the long-term implications of what had just happened. The culprit behind the chaos, a series of aggressive tariffs imposed by the US government that had triggered an immediate and unexpected response from China. For months, the debate over trade restrictions had simmered, with policymakers in the White House arguing that drastic steps were necessary to protect American industries from foreign competition. The administration's primary target was China, which had long been accused of unfair trade practices, intellectual property theft, and currency manipulation. But the tariffs didn't just hit Beijing. Canada and Mexico also found themselves caught in the crossfire, with US President Donald Trump imposing a staggering 25% tariff on imports from both countries. The move had already drawn fierce criticism from domestic businesses that relied on those imports to manufacture goods at competitive prices. Yet what happened next stunned the world. Not only did China retaliate as expected, but it did so with an intensity that blindsided even the most seasoned political analysts. The Chinese government, which had initially hesitated to engage in a tit-for-tat economic war, responded with an economic maneuver that sent Wall Street into a tailspin. Instead of simply matching the tariffs with their own levies, Beijing understood that it had the power to strike where it hurt the most. Technology, Silicon Valley, already reeling from economic uncertainty, now faced the grim reality of production slowdowns, higher costs, and supply chain disruptions that would take years to fix. Apple found itself particularly vulnerable. With much of its manufacturing dependent on Chinese factories, the tech giant suddenly faced mounting production delays. The situation at Tesla was no better. Elon Musk had already been fighting battles on multiple fronts, struggling to ramp up production, dealing with internal corporate tensions, and navigating the cutthroat EV market. Now, with China's latest restrictions, Tesla's ability to maintain its dominance was in question, but Beijing wasn't done yet. Just a quick reminder to hit the like button below. YouTube has been restricting my videos a lot recently because of bots, so your like does help out this video massively in terms of the algorithm in YouTube. The real shocker came when China made a drastic move against the US Treasury market. For years, China had been one of the largest holders of US government debt. By strategically reducing its holdings, it sent a clear signal that it was willing to take the trade war beyond tariffs and into the financial sector. The repercussions were immediate. The US dollar weakened, bond yields spiked, and investors scrambled to reassess their portfolios. For many on Wall Street, this was the moment they had feared. The trade war was no longer just about goods crossing borders. It was now a full-scale economic battle. The implications extended beyond stock prices and GDP figures. If China continued to offload US debt at an accelerated rate, the Federal Reserve would be left in a precarious position. Interest rates would rise, borrowing costs would increase, and the ripple effects could be devastating for businesses and consumers alike. As the markets reacted, Washington found itself under immense pressure. Members of Congress who had initially supported the administration's aggressive stance on trade were now backpedaling. Calls for negotiations grew louder. Business leaders flooded government offices with concerns, warning that the tariffs were doing more harm than good. Lobbyists representing industries from agriculture to technology urged lawmakers to reconsider their approach before irreversible damage was done. Meanwhile, in Beijing, officials remained steadfast. The Chinese government had anticipated the US's moves and was fully prepared to escalate. With its deep financial reserves, strong manufacturing base, and growing influence in global trade, China was in a position to weather the storm. And unlike previous economic disputes, this time, it had the upper hand. At the center of it all was a delicate geopolitical chess game. The White House had underestimated just how dependent American businesses were on China. While the administration's goal was to bring manufacturing back to US soil, the reality was far more complicated. Decades of globalization had interwoven the economies of both countries, making any attempt to sever ties costly and disruptive. The pain wasn't just felt in boardrooms and trading floors. Across the country, everyday Americans braced for the impact. The tariffs meant higher prices on everything from electronics to automobiles. Retailers scrambled to adjust their pricing models, but there was no escaping the inevitable. Consumers would have to pay more. Inflation fears grew, and economic uncertainty loomed large over households trying to navigate an already challenging financial landscape. In the auto industry, manufacturers struggled to adapt. With rising material costs and supply chain disruptions, production timelines were thrown into disarray. Detroit, once the heartbeat of American car manufacturing, now faced a fresh crisis. And for companies heavily invested in electric vehicles, the situation was even worse. If you are enjoying this video so far, please don't forget to subscribe, share the video, and comment. The lithium supply crunch threatened to halt production lines, delaying the rollout of new models and driving up costs for consumers. Farmers who had already been dealing with previous trade disputes found themselves in an even tighter spot. China had long been a major buyer of American agricultural products, but now those purchases were being scaled back. Soybean farmers in the Midwest, already grappling with fluctuating prices, faced the possibility of losing one of their biggest export markets. The impact rippled through rural communities where agriculture played a crucial role in local economies. As the days passed, the question on everyone's mind was whether there was a way out of this escalating trade war. Washington, known for its political gridlock, faced the challenge of finding a solution before the damage became irreversible. Some policymakers pushed for renewed negotiations while others doubled down on the tough stance against China, arguing that backing down would signal weakness. Beijing, on the other hand, remained resolute. The message from Chinese leadership was clear. If the US wanted a trade war, it would get one, but on China's terms. The government's swift and calculated response demonstrated that it was willing to leverage every economic tool at its disposal to counter American tariffs. The global implications were impossible to ignore. Countries that had remained neutral in the trade dispute now found themselves forced to take sides. The EU, already navigating its own economic challenges, faced pressure to align with one of the two superpowers. Some nations sought to broker peace, while others took advantage of the situation, offering to fill the gaps left by the disrupted trade flows. The tension continued to build, and the world watched anxiously. The markets remained volatile, businesses scrambled for contingency plans, and policymakers on both sides weighed their next moves carefully. With so much at stake, the only certainty was that this economic battle was far from over. Thank you for your attention, and I welcome your thoughts and questions on this complex and vital subject. Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to get exclusive videos about how phenomenally China is developing and growing its influence. Your subscriptions and likes motivate us to generate more content, so please keep supporting us. Check out this video showing on your screen right now, and I will see you on the other side.